Shenoy joined just now. Meanwhile, you got to look at UPL numbers. I mean, they were an absolute miss for the quarter gone by. They've cut their full year guidance. So what they've reported, they expect that the coming quarter will be better, but will be much lower than what they indicated to us at the beginning of the year. Now, where is the problem here? It's not UPL, it's the entire agrarian chain, which globally and locally I think is suffering. And the ancillary businesses are also suffering. Look at Balkishan Tires, exports to Europe, they've plummeted. Unique Part Company related with the agrarian economy, that has suffered. Rallis has suffered. Dhanuka has suffered. This entire agrarian economy, in a sense, or businesses which are related with the agrarian economy, they've suffered. Agrochemicals, pesticides, specialized chemicals, I think the bull run there is now getting challenged. Deepak Shenoy, it's a space which you've tracked in the past. I think you have an investment in Sudarshan Chemicals, but it's a complicated space. And it's a space where I look at the numbers, very few good numbers and a lot of bad numbers.
Yes, indeed, Nikunj. I think the problem this particular quarter has been very surprisingly bad. We don't have too many investments, direct investments in the space anymore. In fact, Sudarshan was an old investment of ours. But what's actually, I mean, much as I've not tracked the space, I'm a little surprised by the relative scale of when we expected bad numbers. I haven't seen the UPL numbers fully yet. But I know that this has been a tough quarter overall compared to what usually tends to be a good quarter seasonally for such companies. I don't have any specific ideas on why this has happened. I mean, at this point, I'm not tracking the space quite enough to have clarity on this.
In this market, where are you booking profits in this market?
I'm actually not booking profits. We're investing a lot more. It seems to be that there's too much skepticism about this rally, but and especially when you're talking of the mid and small caps, but some of the results have been quite incredible. I think the news flow also is quite strong. I don't necessarily believe that we are in a euphoric territory. I just think we are in bull markets. And that the results actually show that there's actually some companies where they're probably in the early part of their growth phase. So look at the railways and defense players, look at some of the infrastructure players, some of the banks, the public sector banks themselves have demonstrated quite strong performance already. We're waiting for a lot of the others, but it appears like most of the stronger banks have actually done really well in terms of growth. The only troubling idea there is deposit growth is not quite as much. So I think in these spaces there is some growth and tailwinds happening. Individual company performance, of course, I think we have a bunch of investments that a lot of them have not yet announced results. So we're actually adding more to them as we see them perform.
Sure. Just take a look at the Nifty. There has been a sudden spike in the last 5 minutes, and that's been purely led by Reliance Industries. Pull up the intraday chart and the candlestick if we can of the Nifty as well as Reliance. Let's see what kind of up move we are seeing, because yes, there has been a bit of a vertical surge, and given that heavyweight, even a few points move is something that pulls the Nifty higher. So Reliance has now become your top puller as far as Nifty is concerned, and that is what is really leading the rally. The markets are up almost 150 points off the lowest point of the trading session. Deepak, a lot of moving parts for Reliance. I don't know where to begin with, right from the geofinancial services, wherein they are doing a tie-up with BlackRock for the AMC business. Insurance is something they're looking to get into. Retail, wherein perhaps the Qatar Investment Authority is looking at putting money. How should one look at Reliance now?
It's really a sum of the parts valuation here. We own Reliance, so very biased. But Reliance actually has a lot of sub-businesses now that are all at scale. The financial business is actually not even started. They have just about announced the BlackRock announcement. That AMC has not even filed right now. It will eventually be filing, I guess, whenever it reaches the point where they can. And then there is, that demerger has just happened. So that company is raw. They haven't even started lending or any of the other financial services activity yet. But the bigger businesses that are established are, of course, Jio from the telecom business itself, and retail from the consumer retail facing businesses. I think these are very well established. They're independently profitable. In the oil to consumer business itself, which was a little bit disappointing this quarter, but I think overall has a very, very strong revenue base. And it's one of the largest, oil to consumer businesses in India, as you say. So if you add these parts up, the total makes what Reliance is today. And then there were a bunch of other investments in media and in, a bunch of smaller but surrogate investments like Just Dial and so on, which are part of the retail ventures arm. I think as a sum of the parts, we believe at least that is greater than the price of Reliance right now. But I think the real value will come when they actually demerge these businesses eventually, which will happen over a period of time. And we are actually hoping that unlocks the value over time rather than just being one large monolith.
Okay, so that's the take coming in. Just hold that thought, Deepak. In the meantime, the financial space is quite active, right from IDFC First Bank to what's happening into other names as well, the likes of MMFSL and Piramal Enterprises, because Piramal Enterprises has been fairly volatile. So why not let's listen in to what the management of all of these companies have to say with respect to the outlook.
We do still believe that our margins will be, like currently it's down about, I think, 9 basis points over last quarter. It should be somewhere here. Even if it comes down by a few basis points, maybe 4-5 basis points, really we don't bother about these things because we have a pretty good margin already. We feel that our operating profit will continue to outpace our loan book growth. Our loan book, as you know, we guide for 22-24% in that zone. But let me just say our profit will outpace it, because we are getting the operating leverage.
We had said that we would bring retail to wholesale ratio 2/3, 1/3. And we were going to do that in about by 26, FY26, FY27. I think we will do it much faster than that. Because as you can say, the retail is growing pretty rapidly. This quarter compared to the same quarter last year, we have grown our retail by 57%. And the trend continues for growing our retail.
And if the borrowing cost was to come down, I'm not even saying it will come down as much as it's gone up. But even if it was to come down over a period by at least about 50-60 bips in the next 3-4 quarters, that will straight away lead into our NIMs improvement. And you will clearly see that leads to the 7.5% that we are talking of 2 years from now. But I don't think any one of us are facing a yield pressure arising out of competition. I think what competition pressure does is to be faster than before, to be able to reach a customer, take the credit decision fast, deliver the services much better and faster is what we are seeing as a pressure point, if at all.
Look, nice little surge even in L&T. And Naresh, L&T and Reliance, it's a potent combination because between them the weightage is about 15%. So banks may not chip in, and today they've not chipped in, but it is good old Reliance, and it's getting support from the new leader L&T.
So L&T has been a leader favorite. It could slowly and steadily continue towards 2750 to 2900 mark. So positive on L&T, but the move could be slower. Reliance is the most interesting one, given the fact that if you look at today's prices at 2550, add up to it the 200-250 rupees of the other arm, it comes to around that 2800, 2850 mark, which was the high for the stock for the last almost 2.5 years. So if it can sustain about 2850 levels, it becomes a breakout right from the time it topped out in September 21. So whether it can happen now or going forward, that could be critical for the index because it's a 10% weight and could drive the index going forward. So watching out for Reliance more. The stock is giving indications by consolidating at the higher zones rather than taking a correction quickly. So Reliance Industries going forward, say if I were to adjust the same prices at 2650 odd levels, if it breaks out, that could be a huge move.
IT Pack, that's also showing quite a bit of strength today, whether it's TCS or Infosys. Kunal, would you call it a flash in the pan, a one-day move of sorts on IT, or incrementally getting more constructive on the space?
Well, it's getting a bit better for the IT stocks on the charts at least because many of the stocks have broken past about their 3-day swing highs. Not just that, to complement this, even the indicators have come back towards, I think, a 1-week high post the results for many of these large cap IT names. So I think that's another positive. It indicates that, for example, when RSI gets you a leading breakout, it generally gives a first sense that the prices may have bottomed out, or at least the worst could be behind the stock prices for many of these beaten down stocks. So I think that could be something which could be probably playing for the IT pack. But the point is that it's always better to buy this when the prices confirm a breakout of their previous major swing highs. So I think in that regards, if TCS breaks past about that 3500, 3520 mark, that could actually be a better time bet rather than trying to anticipate that whether these minor rallies would convert themselves into big trends. So wait out for a confirmation. I think only about 3,500, 550 for TCS and such other similar levels for these IT stocks, large cap and mid cap IT names is where one should take a call.
34.24. So Deepak, the jury is not out. AI is good or bad. For those who like IT stocks, they say you are forgetting Y2K was supposed to be bad. It turned out to be great. Ramdev Agarwal is saying AI to Indians hi chalayenge. But then I've got folks coming from some of the big consultants. They are saying that AI will replace humans. So what should one do? Buy TCS, buy Infosys. These are great companies, great cash, strong ROS. But would you buy them at the downturn?
So I think, we own TCS, so obviously a little biased, but here's my take. There has been no technology which has promised to take away jobs that has not created more jobs in the process of doing so. I think AI is a weapon in the hands of the right user rather than an independently functioning entity by itself. So whatever AI turns out to be, it will need humans to handhold, lead, control, manage the process. They will not independently be able to do things. Of course, it means productivity can increase. A single person using AI can perhaps do the work of 10 people today. But that just means you'll get 10x the work that is required, because once people start seeing the scale of the things that is possible, the project sizes will just increase in quantity and in size and scope, rather than say that, I'm sorry, we'll just hire 1/10 your workforce rather than anything else. I think in general, work expands to fill the capacity, and as more AI comes, I think these businesses will actually do more business, like you said about Y2K. But it's not, Y2K is not the thing. Y2K was a very time limited concept. But think of telecom space, BFSI. More regulations may have always meant more work. More computerization has always meant more work for these companies. I don't think they will disappoint too much in that area. I think all of them will eventually have investments in the space. So I think writing them off because AI comes in is probably a bad idea. But yes, the nature of the business will change quite considerably from now to maybe the next 10 years.
Sure, and most of the IT companies have already geared up. Most of them have been talking about it for the last 6 to 12 months. And most of the managements tell me that in any conversation with the client, that's the top talking point. But the talking point also remains market for now. 200-point gain as far as Bank Nifty is concerned. It's IDFC First Bank, which is high by 4%. A large deal was there on Bandhan Bank. That's sitting pretty with a 3% gain. And IndusInd Bank higher by 1.2%. But we just got the earnings from Adani Green. So listen in from the management, Mr. Amit Singh as well. He's the CEO at Adani Green Energy Limited and talks about the earnings and the outlook.
At AGL, we plan to play a key role towards India's energy transition journey, while delivering in excess of 45 gigawatt renewable energy capacity by 2030. Our current operating capacity stands at 8.3 gigawatt, which is the largest in India. Further, with already signed PPAs and letter awards, we have the largest locked-in growth of up to 20.4 gigawatt. Our renewable capacity has grown at a CAGR of 33% over the last 5 years, outpacing the overall growth of renewables in the country at a CAGR of about 15% over the same period. Let me now switch our attention towards our operational and financial performance for Q1/24. On a year-on-year basis, our operating capacity has grown by 43% with greenfield addition of 2.5 gigawatt. This is enabled by AGL's project development approach that is underpinned by 3 years of advanced resource assessment, supply chain planning, and value engineering, a centralized project management and assurance group that enables simultaneous execution of projects across the geographies, and a cluster-based approach where we work, resulting in significant operating efficiencies. The sale of energy in the meantime has increased by 70% year-on-year to 6,023 million units, primarily on account of the robust capacity addition and best-in-class O&M practices. Revenue from power supply has increased by 55% year-on-year to rupees 2,059 crore. EBITDA from power supply has increased by 53% year-on-year to 1,938 crores, with an industry-leading EBITDA margin of 92.5%. The cash profit has increased by 55% year-on-year to rupees 1,051 crores. The run rate EBITDA now stands at a strong rupees 7,645 crore, with net debt to run rate EBITDA at 5.3x as of June 2023. We continue to focus on operational excellence to enable safe, secure, and sustainable operations throughout the journey. Our ENOC Center enables real-time monitoring of portfolio across the country. The AI and analytics-driven operations and maintenance approach has led to the achievement of these industry-leading EBITDA margins and a consistent high plant availability, thereby resulting in higher power generation at a low cost.
All right, let's take the conversation forward. Deepak is there with us along with Nuresh and Kunal. Deepak, from the fundamental standpoint, you manage such a big amount of money now at your PMS and especially navigate mid to large space very closely. Are you finding it tricky to look for really juicy risk reward kind of scenarios now? Because fact of the matter is that everything, has gone up in the last 6 months from lows. Which is one area which is completely bombed out in your view? Earnings are very bad shape. Cycle is just not favoring, is at the bottom of the cycle.
So to be fair, I don't like to look at it that way. I usually like to look at sectors that are already demonstrating performance. Probably the stock prices are at a high because in stock market prices go up in the long term because of inflation itself. And if you get a stock that's actually going up, it's doing exactly what it's supposed to be doing, and it has good business performance behind it. You add the two, you get a fairly good, interesting longer term story. You'll never catch the bottoms, but that's fine for me. I mean, there are other people who want to catch bottoms, but I'm happier, riding it when they've shown some performance. So right now, for instance, if you look at even interesting stocks like say a PFC and RSCN, we own them in one of our portfolios, but they're at 4 times earnings, and relatively speaking, their NPAs have come under control, and the lack of visibility on their NPAs is lower. They started looking to borrow something of the order of 5 to 6 lakh crores against a lot of the new green projects. So I think this kind of pocket of a re-rating of these, if you go from a 4 PE to a 5 PE with no change in earnings, you're still looking at a 25% jump in the underlying stock price. So that this re-rating can happen over a period of, let's say, 2 to 3 years. That's still reasonable in terms of plus you get the earnings growth behind it. So there will be pockets of opportunity no matter how high the markets are. And I think right now there is still a lot of opportunity, especially in the mid and large cap space. And also in the small caps. Small caps currently, actually, their P ratio at the small cap index is less than the mid cap or the large cap indexes. So they have shown earnings growth at a quite fast clip. The last 6 months, you've seen some stock price rises. So yes, of course, if you choose some stocks, you will see some correction in them. But I think if you're looking at a long-term story, now is also a good time to pick. India is actually at a very interesting stage where I think the next 10 years are going to be very positive for us. Longer term. So picking stocks,
Yeah, because we are very close to the market closing, it's important to take BTST ideas, both Nuresh and Kunal. Nuresh, starting with you, do you like something to take home overnight position?
Both PSU stocks, first is a buy on NMDC, good price volume breakout here, stop loss at 115, target price of 122. Second is a buy on ONGC, a new 52-week high, as well as almost a 2 to 3 year high on a dividend adjusted basis. Stop loss at 174, target price of 182.
Kunal, what about you?
Hindustan Copper is the first stock which I would suggest as a buy. BTST trade targets 150, stop loss at 134, and NMDC is a buy from my side, targets closer to 124, stop loss at 113.
All right. Deepak, you must have caught the commentary of this 5-star finance today. They were already doing 30% growth. Now they have raised it to 35. What are the other companies which have similar business models to 5-star business finance where one should be keeping on radar?
So I haven't seen 5-star per se. We don't track it. But of course, 35 is even what I think Bajaj Finance did. So it's been quite a wild ride, I think, for anyone doing the personal retail space. Retail space growth has been at least 25 to 26% overall in the industry itself. Some NBFCs will be obviously higher. We found in general that the personal space has been seeing much dramatically more rising credit total overall aggregates. And I think the NPAs haven't started to show in any meaningful way. So it seems to be an interesting cycle where you might see the credit growth transition into realized gains for NBFCs and banks in the space. There are no signs of worry right now, but obviously every growth cycle comes with its own negatives. So one has to be a little cautious, I think. But in general, I would say the retail space is where the attractiveness is. Some part of it is in the SME space as well. SME space is very early. I think rural SME and general SME, I think there is a lot of space, space to grow. We're seeing some bank commentary also today that talked about it. Again, positive, but I'll wait again for to see whether the NPAs develop. But we do have positions in a number of players in this space.
Deepak, do you have positions when it comes to healthcare? And I'm specifically talking about hospitals here because this morning there was this note that came in from Macquarie. They have initiated with an underperformer, Apollo and Max, saying that the valuations are expensive. There is a regulatory overhang as well. How are you looking at the sector?
So we do have a position in Narayana Hridayalaya, which is Narayana Healthcare. They apart from what their India journey is, they also have a hospital in the Cayman Islands. And it's the early days. They're setting up more capex there, but the realizations in Cayman are actually something of the order of 8x or 9x what they can get in India in terms of revenues. Perhaps in terms of EBITDA also, the multiples are quite high there. And given the cost differences between that and the US, and they're in the same time zone as the US, you get a substantially cheaper surgery and inpatient cost compared to anything in the mainland US, which is, I think, one of the factors that might lead to medical tourism in the same time zone at a relatively lower cost than people coming all over the way to India. In the near term, the stock prices have gone up, so there may be some corrections. But I think longer term, this at least Narayana, I think should be valued at much higher than it is. As the Cayman Islands capex comes through and as some of the expansion within India also takes place. I don't believe they're too expensive. I just believe that the growth story is ahead of them. So some part of what we're paying today will be paying for that future growth as well.
Sure, point taken. That's the word coming in as far as healthcare stocks is concerned. Deepak, did you manage to catch that story on Kotak Mahindra Bank? Was everywhere in terms of how the RBI is nudging them to look for an outsider when it comes to the CEO position, but the bank refuting those stories. Do you think this could be a bit of an overhang for the stock, at least for the next 6 to 12 months till the time clarity emerges?
Well, I would say at this point, so we own Kotak just as this thing. But one of the things that I found in this case is, I think they will find an able leader to lead the bank. Whether that is an insider or an outsider, that should be left to the bank's board. Whether an RBI can make recommendations on this practice, I'm sure they are probably talking to people and saying, okay, tell me the names of the candidates you have in place and all that stuff. Rest of it is a little bit of speculation about saying, oh, RBI saying find someone external. Does that mean that there's nobody internal who can actually lead the bank? I don't think RBI would make such statements saying you don't have anybody right now that can actually lead the bank. It could be that they have proposed a bunch of candidates, and maybe the candidates that RBI is favoring are not internal. I don't know if that's the case. I mean, it's an entirely opaque to us. But all I know is that, given the stature of the bank, given the nature of Mr. Kotak's investment and, commitment to the business, I don't think this will be left high and dry in any meaningful way. The bank itself is quite strong from both an asset quality perspective and a capital perspective. So I don't think this is a cause for us to worry right now. Of course, more clarity will be welcome. So till that time, I think the stock will, do its own thing. People sometimes get bogged down by unrequired uncertainty. But I mean, this is too big an institution to say it's driven only by one person. So, I don't think that is the case. I think the bank will do well, regardless of, what the choice of CEO will be going forward.
Okay, so that's the take coming in as far as Kotak Mahindra Bank is concerned. Quickly taking stock of what's happening. Last couple of minutes left for the trade to end, and it's not a bad ending at all from where we started off and how the rest of the day was panning out. At one point of time, we were going to go below the mark of 19,600, so 19,750 should be pretty okay. But before we let you go, gentlemen, just wanted to take stock of what kind of positioning you will have on the market, Kunal?
So I think on the index fronts, we'll still maintain long both on the Nifty as well as on the Bank Nifty. In fact, my sense is that the Bank Nifty actually hit an oversold territory on Friday's trading session. And you look at today's recovery of 200 odd points for the Bank Nifty, tells you that maybe a near-term bottom could be at place for the banking index. Okay, so the bottom is made for the banking index. Watch out for that. But separately, in terms of sectors, it was metals which was shining. Hindustan Copper goes home with a gain of 10%. NMDC, APL Apollo, these were your big gainers. IT stock, quite a bit of bounce back today, 1.5% higher, led by Tech Mahindra, then TCS, Emphasis, Wipro. All of these beaten down names saw quite a bit of recovery. That entire powerful rally in the power stocks continues. So NTPC was up a solid 4% today. Power Grid ahead of its earnings was up 3%, and the entire energy space, the likes of ONGC, etc., were doing quite well in the trading session. Lots of result reactions really to deal with, but in terms of stock-specific moves, it was Wellspun India that spiked as much as 9% after it reported earnings. We saw also a move come by in UPL, very volatile by the end of the trading session, choppy as far as the guidance cut is concerned, but goes home with a bit of a red tinge. And then BLS International, BEML, IRFC, these were your top movers. On the losing side, don't forget Piramal Enterprises. That stock goes home with a cut of around 6%, despite the management saying they will not be participating in the buyback. There is still a bit of niggling worry as far as that is concerned. And then, of course, you saw some sort of profit booking on Intellect Design, Equitas Bank as well. But that's how we're wrapping up the day. Very, very strong in terms of the advance decline ratio. The broader markets continues to outperform, and we'll track all of that when the market opens tomorrow as well. But for now, it's a goodbye.